once again, the handover from the global markets has been quite positive. You have Asia, which is a little bit mixed today.
Revenue was close to 16,500 crores. The street was working with a number of 17,000 crores.
ROA has declined below the 5% level.
And on the Nifty bank, we should sort of be mindful that we don't see a break below the low of 44,429.
We think three segments, mainly roads, airports, and what they call a new energy ecosystem, are currently worth more than what all of Adani Enterprises is valued at right now.
The first tick on the index is up in the green, up about 40 odd points.
21,700 index, risk reward plays a very important role.
I don't expect any major changes in the capital gains tax side.
We're dealing with a flat market after the big surge that we had yesterday.
As we focus more on improving the asset turn, we see a further improvement in the margins.
And conditions precedent that are pending are joint, and Sony and Z were scheduled to close them. They are saying they've reached a settlement regarding user-based charges. Markets are lower today, but the mid-caps are doing really well.
Well, that's the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi here. And Nigel, of course, is joining us as always from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And after yesterday's big gain, today there is a bit of a give back.
There is a bit of a give back. Actually, in the morning, I was just thinking, Nigel, GIFT Nifty was indicating a 100-point higher start, if you remember, at 8:15. Yes. And actually, if he had gotten a 100-point higher start in the Nifty, had added 100 points on top of yesterday's 400, I mean, I would have been at a loss of words, So actually, this is more like it, if I can say so, that a big, massive pull, and then there's a bit of a pullback to yesterday's pullback is what we have.
Yes, but also, Nigel, go ahead.
No, some kind of sanity that's playing out, but importantly, if you look at it, in the last 10 or 15 minutes, we've moved to the low point of the day. And now the Nifty actually has broken the 20-day MA. So you don't want that to get broken decisively, because that was the level that was a bit of a resistance zone. So the Nifty, and I think you get the 20-day MA up on your screen. So some bit of a pullback is par for the course, but you don't want these technical levels to get broken on a closing basis at least.
Absolutely. I was just saying exactly that now it's no longer just consolidating and digesting yesterday's move. Now it's giving back yesterday's move. So let's see, we've got a full 1 hour of trade left. And let's see if this stabilizes here around these critical zones for the Nifty, or whether indeed it's a completely choppy market and we start falling a bit more.
100 and 400 is 25%, right? That's okay. I mean, if you look at it, in that sense, but it's a pullback, absolutely. The 400-point surge was, it seemed we were expecting a bounce yesterday, but no, I don't think anyone thought it'll be worth 400 points by the end of it. Take a look at this. The low today, I'm not sure if we made a lower low. Let me just quickly take a look at this. So the low today is 21,615. So yeah, I think we've made a bit of a lower low. But when we put these numbers out, we were still around the 20-day. There you go on your screen. 21,628 is the 20-day. But now we are slightly under it, as Nigel also mentioned. On the upside, I mean, you basically need to climb back above the 21,747 level, which is nothing but the 61.8% retracement of the fall from the all-time high of 16th of January to the low of 24th of January. I mean, that sharp fortnight fall that we had, 21,747 is the 61.8 retracement of that. The Bank Nifty is doing nothing. I mean, at least when we were walking in, I mean, it's still around the 40-hourly exponential average, which is 45,450. So watch the close here. I think, whether there is something which happens or the Bank Nifty stays around this. PSU banks, real estate, metals are the three sectors where there is bulk of the action. Global markets, of course, will wait for the FOMC decision here in India. Closer home, there is the budget as well. Both will play out when we come on Thursday morning. But there's one more day between the budget and today. That is Wednesday session, which is tomorrow. By the way, US markets have been phenomenally strong as well. That's the other piece of the puzzle, right? Here in India, at least you had a bit of a correction, however small, 4%, 2 weeks worth. In the US in the last 3 months, there have been pauses, and then there have been big moves like what we had last night.
By the way, markets are cracking now. So 21,600 is gone on the Nifty. The Nifty Bank has seen a crack in the last 10-15 minutes. It's now in the red. The advanced decline ratio so far at least
is holding in favor of the gaining side. But look at the fall, and now it's picking up some momentum on the way down. In the large cap space, heavies like the Bajaj twins, Bajaj Finance, Bajaj Finserv are under pressure. Reliance, ITC, these stocks down close to about 2.5%. Few places to hide, but HUL is up. You've got BPCL looking quite smart today, and Tata Motors and iShield are still at the day's high.
Yeah, I mean, today, even if you look at the mid-cap action, it's kind of somewhere in the middle. The advance decline ratios are pretty much neck to neck right now, almost even, Stephen. I mean, 1,200 advancing stocks, a little over 1,000 declining stocks. Let's see if that can hold. The great PSU rush that we constantly speak of today, it's not as clear. You do have some stocks that have taken a bit of a breather, if not a cool off or a correction. Ircon, for instance, or look at some of the other names like REC, Coal India after yesterday's breathless run. These stocks are giving back about 2-3% depending on which one you're looking at. IRFC, the one that absolutely knows no stopping, today has managed to pause for a bit, about 2%. But having said that, look at the other side. I mean, you've got a BHL that's doing well. Some of the PSU banks are still holding up. Bank of India, for instance, PNB, there's some green on the PSU banking side. So trends are a bit mixed, you'd have to say. And then if you go beyond the PSU rush and if you go beyond the immediate earnings reactions, then you're still getting moves. I mean, look at what's happening, for instance, to an IRB. After yesterday's massive surge, it's putting on another almost 10%, 11% last I checked. There's Orchid Pharma, thanks to this new drug that they're talking about, which has been approved in the European geography. The market's very, very excited on the prospects of this one. And that's a stock that's up 20%. So individual, movers and shakers always out there. But I think overall, Nigel, we have a bit of a question mark on which way things are going to head in the next 1 hour.
Well, that's right. So let's get in a technical expert then. Rahul Sharma, JM Financial Services, joins us to help us out with exactly that. Hi, Rahul. You have joined us at a perfect time because as we speak, the Nifty has moved to the low point of the day. We have just broken the 21,600 odd mark and all the frontline indices are now in the red. What's your view on the index? Do you think we want to go and test the recent lows, or do you think this kind of a bounce needs to get bought into?
Yeah, hi Nigel. So yesterday's move was, peculiar, sharp bounce back without any challenge whatsoever during the day, and fizzling out in less than a day's time. So today we are seeing, eventually markets coming back to where the averages were, and finally we are seeing some volatility, especially the India VIX rising above the 16.5 mark. My sense is the broader direction of the market is still down. 21,750 is the resistance on a closing basis. We sort of tested that, and we've corrected from there. Now the next meaningful support for the Nifty is placed at 21,450. Below that, we see the cut could extend towards 21,000 on the downside as well. So as of now, from an actionable point of view, I think it is the banking index which can be looked upon for shorting. This is the relatively more subdued index when it came to a bounce back yesterday, as well as today also. It is sort of breaking the range that last two trading sessions have been formed. So my sense is Bank Nifty possibly towards 44,700 is where we are looking at on the downside. So that brings us to about 600-700 point correction from the current levels. And a banking index is the one to go for, especially after the rollovers where we saw very strong short rollovers happening in this index. And as far as the rest of the market is concerned, we have the PSU pack, which is doing very well, reality space, which is doing very well. And like you very nicely summarized, there are a lot of mixed signals which are happening before the event. But at this point in time, I think between the two, it has to be Bank Nifty if somebody has to take a short position, especially for the next couple of trading sessions.
Okay. What about individual stocks? What would you recommend, Rahul, for trade?
Yeah, so on the PSU banking pack, from a delivery perspective, we like UCO Bank, multi-week consolidation. PSU bank index has actually hit a new high today. So it's a bit of a contrarian, but looking at the way the bigger structure is, we feel that there is a good 20-25% upside to be had in this counter. So from a delivery perspective, one can look to buy UCO Bank at these levels, have a stop loss at 39 odd. And we feel that around 55 plus to maybe 60 as well is very much achievable in the next couple of months time frame. As far as trading on the derivative side is concerned, we feel that there is a good shorting opportunity that can be had especially in the financial names. So we've seen Bajaj Finance breaking down today and on the back of negative results. But we feel there is structural damage that has happened in Bajaj Finance, and we could easily see the cut getting extended to another 4-5% in the very short term. And structurally, we feel that the stock is headed towards 6,500. So one can look to go short on Bajaj Finance or maybe look to buy puts for an initial target of 6,500 on the downside.
Thank you very much for that. Moving on, shares of HPCL have made a 52-week high today, and now in the month of January, it's up 20%. Now, this recent surge in HPCL has made ONGC's investment profitable after nearly half a decade. To talk more about it, we are now joined by Hormus. Hormus?
You know, it's taken 6 years for this to happen, but ONGC's investment in HPCL has finally turned profitable, courtesy the surge that we have seen in HPCL's shares over the last 3 months. Now, what happens is that HPCL, the ONGC, had acquired that 51% stake that the government had held in HPCL in January of 2018 for a sum of 36,912 crores. And the acquisition that they had made back then was at a price of 473.97 per share. And that day, on the 31st of January 2018, HPCL's closing price was 397 rupees. So the acquisition was done at a 20% premium to HPCL's closing price on that day. Now, HPCL, after underperforming for most of 2023, saw a massive surge after its September quarter results, where the stock went up by almost 40% in November, 15% in December, and now courtesy the surge, this continuing surge, now it's up another 20% in January as well. Now, HPCL made a high of around 485 today, which means that it has eventually now crossed ONGC's buying price, which was around 474, and the stake now that ONGC holds is currently valued at around 37,700 crore rupees. Now, other than ONGC, who owns stake in HPCL, is around 14.5% stake belongs to the India's mutual funds, and LIC owns around 4.5% stake in the company. Well, it has taken 6 years, but ONGC is finally in the money when it comes to its HPCL investment. Back to you.
Okay, all right. Thank you very much, Hormaz, for that. Pretty interesting. Sonal is also here to take us through a comprehensive look at HPCL's financial performance over the years. Sonal?
Thank you for that. Well, for all marketing companies, of course, you have to understand that the crude prices, the way they move, what has been the excise duty on fuels, what have the refining margins been, and also in last 6 years, we have seen times like COVID where we did see record low crude and refining margins as well. So just taking a look at the margins and the profitability over the last couple of years for HPCL, and let's start with margins. It hit a high of 7% in FY21 after margins between 2 to 5% between FY18 to FY20. FY22, it fell to levels of around 3%. That was led by lower refining margins. And in FY23, it made negative margins. So the EBITDA was a loss this time around. And that was again led by the refining performance that the company saw. There were lower margins in this particular segment. In terms of profits, they did see record high profits again in FY21 at 10,663 crore rupees on a yearly basis. This was after they did profits of around 2,613 crore rupees in FY20. And in FY23, again, all the oil marketing companies made a loss, and HPCL was one of them. That was around 6,980 crore rupees. But what has helped HPCL in last couple of quarters is they've added capacities across all their segments. Be it the refining capacity, which has increased from 15.8 million metric tons to 20.5 million metric tons. Their pipeline network has increased from 3,300 kilometers to around 5,100 kilometers. Their retail outlets have grown from 15,062 to around 21,000 in terms of numbers. Their CNG stations have almost increased 6 times or 7 times in last 6 years. So they have been expanding continuously over the last couple of years. They made investments of 74,000 crore rupees on building their infrastructure, and additionally, they are doing a lot more in terms of addition in refining capacity and new energy space as well to improve the infrastructure and improve their refining yields as well. Now, they also did an open market buyback, the only PSU to do an open market buyback on 4th of November 2020 with a 45% premium to that times market price. So this was a one-off event. And in OMCs, HPCL has the highest exposure to marketing segment. So any changes there is something that would impact the company. The next is the outlook that they have going forward in terms of their refining capacity, their retail outlets, their petchem capacity and biofuel capacity. So they do have a lot of plans of increasing capacity till 2027, 2028 as well. So there's a lot which is expected, and that's what the street is bullish on as well.
Okay, all right, got that, Sonal. Thank you very much for putting things in perspective with respect to just the financial performance for HPCL over the years. We have Hemang Jani joining us this afternoon on the show. Hemang, thank you for joining in. It's been quite a big move for HPCL in just the last couple of weeks. What are your thoughts here? Do you think this is sustainable? And if you do like OMCs, then where does HPCL figure among the three?
Yeah, good afternoon, Surbhi. What a move we've had across the PSUs, more so, in the last leg of this rally. The way the oil and gas companies have really shot up is quite remarkable. And talking about HPCL, I think the numbers were not so great, but what market is looking for is a much better scenario for the marketing margins going into FY25 and 26, almost about 3.3 per liter. And, given the, range bound oil price, and if the government is not in a move to kind of cut the retail price, so the marketing margin scenario is going to be better. And HPCL has a slightly higher exposure to the marketing margins, and also the lubricant business can get demerged. And in terms of valuations, it is still quoting at about 1x price to book. So I think in the current scenario where PSU as a theme is catching up so well, even at this price, I think HPCL offers good margin of safety. We are looking at about 22 to 24% kind of an upside from current price point.
Okay, all right. By the way, the markets have actually seen some bit of more selling that's crept in there. And as we speak, actually, the 100 DMA, that's got taken out on the Nifty Bank. So you pull up the Nifty Bank with the 100 DMA, you'll see that that's just got broken out. And also on the Nifty, the 20 DMA as well has got broken out. So some bit of selling has crept in, particularly just in the last half an hour, actually. Now we're down 170 points. Among the other big number that we'll be looking forward to is L&T. What's your view on the stock? That's a proxy play on India's growth and India's entire infra play. Your take?
Yeah, so very positive view, Nigel. Today, the company will be announcing the numbers. We are expecting about 17% kind of a YY growth in the EPC revenue. The margin is going to be more of flattish. But I think given the revival in capex cycle, and particularly from the government side, the way they've gone about giving out the orders, and also a bit of a revival in the Middle East, we think that the numbers are going to be good. More importantly, typically ahead of the budget, infra plays like L&T tends to do well. So we have a positive outlook on L&T for about 18% kind of an upside from current price point.
By the way, Bajaj Finserv has just announced an acquisition. They've acquired a company called Vidal Healthcare for an enterprise value of 325 crore. Vidal Healthcare is a third-party health insurance company. They had revenues of about, I think, 227 crore, and the company has paid 325 crore. So an acquisition coming through for Bajaj Finserv. It's a health insurance third-party administrator, similar to the recently listed company MediAssist. Vidal's competitor, direct competitor, would be MediAssist, the company which recently got listed. Hemang, what have you made of the numbers of Bajaj Finance, and any thoughts on this acquisition by Finserv?
So Bajaj Finance numbers on the face of it, optically they look okay, but I think the concerns or the pain points are on the credit cost and the compression in the margin. Also the regulatory nudge which was there, I think it would have some bearing, given the fact that it continues to be one of the most expensive NBFCs in the country today. So while in terms of credentials and pedigree, it continues to look good, but in the current scenario where the banking sector is going so much of derating, it would be sensible to look out for better opportunities, maybe in something like a State Bank of India or some of the smaller PSU banks, because I think in the near term, let's say about a couple of quarters, Bajaj Finance is likely to underperform. So definitely would avoid buying into it at this point of time.
Okay, all right. Hemang, stay with us. We'll take a quick commercial break here. We'll come back. We'll also have Amit Jeswani, founder and CIO at Stallion Asset on the other side for a conversation. Stay tuned.
Finance Minister Nirmala Sitharaman is all set to create history as she presents her 6th consecutive union budget. What will the budget mean for you and for me? Stay tuned to CNBC TV18 on our YouTube channel as we analyze the budget in real time and bring you the best analysis. Stay tuned to CNBC TV18, your budget headquarters on YouTube.
Welcome back. You're still tuned in to Closing Bell. Now, Sony has initiated proceedings in the Singapore Arbitration Court against Zee Entertainment. Nisha joins in with the details. Nisha.
That's right. An ugly legal battle really begins between Zee as well as Sony, with Singapore International Arbitration Centre hearing the matter on 31st of January. Now, this is on the breach of terms of the agreement which was alleged by Sony while terminating this particular merger. And remember, it also slapped a charge of $90 million against Zee. Now, Zee has countered all these claims made by Sony. And now, in the absence of any formal negotiation on the matter of Puneet Goenka's position being the main cause of breakdown, which, remember, we had earlier explained was done informally, well, the main legal bone of contention for this legal tug of war are going to be the conditions precedents. So Sony claimed that financial thresholds were not met by Zee on time for the merger to go through. Zee's claim is that their part of the CP were complete, and that sources do indicate to CNBC TV18 that certain condition precedent or CPs were operational in nature and have been completed by Zee. Some pertaining to the international businesses also, and the closure of that have been closed by Zee, which includes the businesses in markets like Thailand, Russia, as well as Germany. Now, CPs that are pending are joint, and Sony as well as Zee were scheduled to close them together. Like the unfinished ones, including the submission to MIB, which was Sony's responsibility, sources with direct knowledge share with CNBC TV18. Now, in another important legal development on this particular matter, NCLT has agreed to hear Zee shareholders' plea on the implementation of the merger, and here the legality of the termination will be heard by the court, and Sony called it Zee's proxy, which Zee has refuted in the court hearing. Now, remember that NCLT Mumbai had earlier approved Sony-Zee merger, and NCLT will now adjudicate on the legality of the termination of the merger and asked Sony to file a reply to the petition by the shareholder within 3 weeks, and the next date of hearing is going to be on the 12th of March. Meanwhile, arbitration will continue, and separately, Zee had earlier stated that it had also approached NCLT Mumbai to order the implementation of the merger while writing to Sony to withdraw the unilateral termination.
All right, Nisha, thanks very much for that. Hemang is still with us. Hemang, you heard Nisha lay out what's happening with Zee, but I mean, the market's excited. I'm not sure whether for good reason, but what's your sense?
Really, Prashant, the manner in which this deal has been called off, definitely it has not gone down too well. Despite this being the largest, media company, the issues that were there in terms of corporate governance, the time it took to kind of reach a certain level of, this fructification of the deal. And now that we have this, Sony calling off the merger, surely I think it will take, much longer time for the stock to settle down. I think it would make sense to stay away from it, though you may have a little pullbacks here and there. But surely this is not looking too good.
Okay, all right. Hemang, before we go, I just wanted, your view on ITC. The numbers are a little bit disappointing for sure. And there's that overhang, now we have a vote on account, but later on we'll have the bigger budget in the year. And that will be a bit of an overhang on the stock. What do you do with it? At around 450 rupees, it already saw some selling pressure ahead of the numbers, and now post that it's down further.
So Nigel, numbers were a bit of a disappointment, and I don't think in the this vote on account you will see any major negative surprise as such, unlike what we have been expecting when the budgets are around the corner. But I think for somebody who is happy with the 12-15% kind of a return, having seen this kind of a correction in the fact that the hotel business is doing well, cigarette, you will see some stability, and a 4% dividend yield surely offers a good value proposition. But yeah, it's not a momentum stock. It's unlikely to give you a big spike, 15-20% kind of an upside. So for somebody who's looking for a low risk bet, it fits the bill.
Okay, moving on. Adani Enterprises is up close to about 1.5% in today's trade. This is after Cantor Fitzgerald initiated coverage in the stock yesterday. It was an overweight rating. Earlier today, we had a chat with the author of that report from Cantor Fitzgerald to discuss why they were so bullish on the stock. Listen into that conversation.
We think three segments, mainly roads, airports, and what they call a new energy ecosystem, are currently worth more than what all of Adani Enterprises is valued at right now. The segment that I'm probably most positive on, I would say within 5 years, is probably airports. This is a segment I think can do $1 billion plus of EBITDA within 3 or 4 years. Close comps are trading at 20 times that. So you could see within 3 or 4 years, Adani Enterprise look to demerge that business at a value close to 20 to 25 billion, and Adani's Enterprise's current market cap is just 40 billion. Beyond that, you look at new energy ecosystem, which includes solar manufacturing, wind turbine manufacturing, and then there are plans for green hydrogen ecosystem. That green hydrogen ecosystem, which actually is not in our current valuation, is something that could, within 10 years, do, call it $7 billion of EBITDA. Here you're getting airports, your roads, renewable energy, called old energy or fossil fuels, with what they do with mining and call it commodity trading. So it's call it a diversified play on India, but with leadership that I think has proven success of growing above market rates. I do think that has been a hindrance. I think some of that has been the lack of institutional coverage on the Adani Group. There's not many analysts out there writing research on it, which, when we first kind of stumbled upon it was a bit surprising given I think it's the 10th largest non-financial stock in India, which is now the most populous country in the world. So I do think that's a bit surprising in terms of feedback we got. We thought interest was very good.
Okay, well, that's a canter on Adani, but look at the market now. More pressure, clearly more pressure. Now, this is almost a 1% cut. So yesterday, the market ended about just under 400 points higher, and it's a 200-point give back, just like that. I mean, these are wild, large moves coming through. The only thing I can say is that when we started the morning bazaar show, I mean, the advice was not to go in, not to chase the moves and kind of stay out. So I think directionally, but for example, yesterday we were expecting a bounce, but the size of the moves is what is surprising. Not the direction, but the big ones. I think came as a surprise to many yesterday, and of course that big Reliance move, and today on the other side now. So a pretty large volatility is what you're seeing. We'll put out some technical levels, etc. in a bit, but let's welcome in Amit Jeswani, founder and CIO at Stallion Asset, who's with us. Amit, good to have you with us here. Thank you very much. Just to understand what the market is smelling. Is it smelling something? There's some confusion ahead of the budget? There is the FOMC. What are you picking up really? What's going on? Very near term.
Hi, Prashant. Good afternoon. Thank you so much for having me on your show. This is just normal 1% plus minus. We don't even have a view. We don't even see what is happening so closely. But why was the market up 2% yesterday? That remains a suspense. And why is market down today 1% also remains a suspense. So these are very random moves in nature. I don't see any material. But of course, we do believe that we have entered a phase of volatility expansion, and we all investors, traders, should be prepared for very high volatility for entire 2024. It's not going to be like 2023, which was like a straight line move. 2024 is going to be way more volatile.
Any big changes that you've made in the last 1 month, Amit, to your portfolio in terms of additions, deletions, weighted changes?
So, Rima, we've added Polycab lately. We sold Polycab, and once the income tax news came, the first time when it got raided and etc. This is before the PIB press release got issued. We had got the weights down, and we have added Polycab back to our portfolio, and it's our number one position as of today. So it's about 7.5–8% of our portfolio. So that is so it's at 65,000 crores market cap. We expect 1,800 crores of profit this year. We expect 2,300 crores of profit next year. So it's at 28 times FY25. And what we've seen, Rima, is that people forget markets have a very short-term memory. And like Ratnamani had an income tax rate similar to this, 400 crores of unaccounted revenues got found. And the stock, this happened in 2021 November. The stock has moved up 3 times from there. So, of course, there's a risk involved in the Polycab trade. But if we go right, we should double our money in next 1 year.
Okay, all right.
So
hi, Amit.
That is Sorry.
Yeah, complete your point, Amit.
So yeah, so there's a risk involved. We know the panic bottom of the trade was 3,850. If it reaches there, we'll see what to do. But right now, we believe that Q4, even if you see what peers are doing, Nigel, be it RR Kabil, the growth was 11% yesterday. KEI growth was 15%. And Polycab was not working for last 8–9 days this quarter. Yet the growth was 17%. Typically, Q2 is better. The analysts are expecting 1,800 crores PAT this year. We expect 1,850 crores. But the Q4 should be a very, very big quarter, which is typically the best quarter for Polycab. And Polycab should be back to the 30% volume growth kind of numbers which they are doing. So
all right.
If we go right, we should make a lot of money. If we go wrong, we'll lose some money and move ahead.
Okay, all right. Amit, the last time you joined us as well, you were talking about a growth company. You mentioned JTL that you all had gotten at around 200. And you said you all had preference on that one rather than APL Apollo. And, that's done pretty well for you all. I'm looking at the footwear space. I know there are other big names in there like Metro. But you have gone in and you have bought Red Tape, I believe, as part of your portfolio. Tell us the rationale out there.
So Nigel, Red Tape, if you see the numbers yesterday, the growth was 29%. We bought Red Tape during the Mirza demerger, but we chase growth. We want companies who can grow faster than the industry. If you see the last 10 years, while a lot of stories have been said about Relaxo, the Relaxo growth rate for last 10 years has been 11% CAGR. And yet Relaxo gets 100 PE multiple. The Metro also gets closer to 90 PE multiple. The growth this quarter was just 6%. We have got Red Tape in our portfolio. We had positions at 3,000 crores market cap, but nothing changes at 8,000 crores market cap as well. As of now, Red Tape trades at about 45 times FY24 and about 30 times FY25. 33 times FY25. So Red Tape should do 250 crores of profit. This is one company. If you see data pre-demerger, the company, this was part of Mirza and it got demerged out of Mirza. When it was part of Mirza, it was growing at about 25-30% for last decade. And shoe companies do get very high multiples. The ROCs of Red Tape is around 40%. When you get 30%, 25-30% growth, 40% ROC, 30 times 1 year forward, we typically bet large, and it is about 6% of our portfolio as of today. So Red Tape is gaining market share from all other players. Look at Bata. I've not seen only growth for a very long time. Look at Relaxo, very weak numbers all the time. You want a leader. Campus last quarter growth was minus 22%. So even when the industry is not doing well, you want to be with the guy who's gaining market share quarter over quarter, reinvesting capital at 40% ROICs. And our bet is on Red Tape.
Okay, so those are some of the consumer names and the thought process behind them. Amit, hi, good afternoon. I'm looking at the holdings for the Stallion Asset Core Fund. And here I see that financial services is still the lion's share of it, right? Almost 34% of the fund is financial services. So, you know, what would be the key holdings over here? And what's your thought now, given all of this uncertainty and this whole volatility around the larger private banks?
Actually, our lending businesses that we have in our portfolio would be about 11-12%. Capital market would be 15% of the portfolio. And then we have Policy Bazaar, which is playing the insurance. Policy Bazaar's got results today. We might lose or make 5-10% tomorrow. I don't know. But so that is how our financial services, out of the 34%, our lending would be about 11%, 11-12%. Capital market would be about 15%. And that insurance player, Policy Bazaar, would be another 6% of the portfolio. So that is how. So we don't have too much exposure to the lending business. Even the lenders that we have, like 5-Star or Bajaj Finance, where we are losing a lot of money today, or Arman Finance, they're all growing at 30% plus. 5-Star grows at 44%. Arman goes at 50%. So in lending, we don't like lending as a business model. The only reason why, so we will never buy a lender if we have 15% growth. The only reason why we buy a lender is if we see extraordinary growth of 30-40%. I will never buy a leveraged business for 15% growth.
Okay, all right. Amit, you know, you seem to have this contra way of investing as well, like Polycap, right? You're going in there, giving it a shot, you believe the business is good. Angel One, that's a stock I think you all got in early. If I'm not mistaken, you all got out as well, but it's still part of your portfolio, so you'll have gotten in. Now the numbers, you know, you would be saying that there's some kind of a miss here and there, but the stock corrected close to 15% post its numbers. Did you all add more? What is the position currently on Angel One?
So we initially bought Angel at about from 1600 to 1800. We were buying aggressively. We sold a decent size Angel at 35-3600, and now lately we've gotten back. So we keep decreasing our weights. We believe the only reason Angel added 25 lakh customers in last 1 quarter, 25 lakh. IIFL SEC added 50,000 customers. I'm just giving you context. 5paisa lost market share. So there was one player. The PAT of Angel, what markets were estimating, was about 320-330 crores because they added a lot of clients. When you add about 25 lakh clients, you have to pay broadly 650 per client. So they invested about 160-170 crores a quarter on client acquisition. Of course, as soon as the client gets acquired, doesn't mean they start trading. I expect on Feb 5th, based on data of NSE, BSE, MCX and cash market volumes, when the data on the 5th of Feb comes out, Angel gives out monthly volumes of number of trades. That should be up 65% year over year. And we believe it's a real challenger to Zerodha. This year, Angel should do about 1150 crores of profit. Next year, we expect Angel to do about 1600 crores of profit. Right now, market cap is about 24,000 crores. So we are buying Angel at 15 times FY 25. Hopefully we make money. I don't know what will happen, but we keep tracking execution. Till the time Angel is gaining market share, it's about 28% market share of derivatives market, 16% market share of cash market. You want a leader who's gaining market share. See, there is no other player who's gaining market share with the pace at which Angel is doing. And once you get that pattern, we of course keep doing up and down because we have to make money for our clients and we have to manage their risk also. The risk reward as the stock keeps going higher keeps changing, and we have to make changes to our position sizing. But right now at 2,900, at 3,200, 3,100, we kept adding and increasing weights of Angel. So Angel is a part of our portfolio, and I hope when we see the next quarter, hopefully it makes a new high. It will cross 38, 3,900. That is what I think. I'm a dreamer. I think they're very big, and I'm always optimistic about my positions.
No, you have to be right. I mean, that's very well put and explained. Amit, yeah, and contender to zero. I mean, you could say Grow is also a contender, but an unprofitable contender. Of course, Angel makes a lot of money, as you said. So that's a different and a key one. What about the Adani Group stocks, Amit? I mean, I'm just sort of throwing that at you. Have you looked at any of them? You know, again, there is that contrarian aspect which may come. None of the institutional fund managers really own it. One or two here or there. You know, there's growth visibility in the areas that they're focused on in a big way over the next number of years. All these other issues, investigations, everything is behind. Have you looked at it? Have you done any work on it?
The problem, Prashant, is that we just looked at it. We never pressed the button. So, we've never been, unfortunately, I should say, we've never held Adani Group stocks in our portfolio. The market caps, the P's, while they keep gaining market share, they are number one executors, I should tell you. But we don't understand what is margin of safety here. And when we don't understand what is margin of safety, we find it very, very, very difficult. And they've just started doing con calls last quarter. So now we'll start getting more clarity on, for most companies, they've started con calls last quarter. Now we'll try to understand the business better, because reading an annual report once a year doesn't, but the group is already 24 lakh crores. Now you have to, so the big money got made when the group was 2 lakh crores, 1.5, 2 years back, to 24 lakh crores. And now you have to really work hard to make money in Adani. So Adani will not have that same kind of move what it had in the last 5 years. And there's certain people in my team who are working to find the next Adani. So we are working on B2G companies, but we've not made any investments yet. And we find very, very difficult to understand the next quarter or the next 6 months in the Adani Group companies. But they are great executors. When you look at as a picture for 5-10 years, you'll be awed by the kind of scale up that Adani does. At the price at which they acquire companies, it's unbelievable. So they're great executors, just that we've not been able to be so smart to acquire them at cheap prices.
All right, Amit, we'll leave it there. Great conversation as always. Thank you very much for joining us with that perspective on a number of businesses, number of stocks, and how you're thinking about the market as well. We're at the day's low, by the way. Now, this is a proper pullback. You know, when we started, the market was down 100. We're down 230 points. So looking really weak. And this is now turning out to be, you know, a substantial fall in the sense, if you look at the rise yesterday, and just sort of, I don't know if you're able to put this up, and we'll try and do it. You know, we've eaten into pretty much, I think, about 70-75% of the move from yesterday. So that is now, this is now pretty large in that sense. More on this in terms of what's happening in a bit. We'll take a quick commercial break here. Nimesh will get us the dealing room flavor. He'll put out some stocks as well that are on his radar. We'll get you technical trading ideas as well. Stay with us.
Welcome back. Well, we are testing the 21,500 odd mark. We're down 230 points. The Nifty Bank actually today is doing a relative outperformance in comparison to what the Nifty is doing. But the breadth of the market as well, you had way more number of stocks that are advancing. Now you have few more stocks that are declining in comparison to the number of stocks advancing. So those crisscross lines come up for you on the screen. But a good time to get in. Nimesh, tell us, what are you picking up on D-Street Chatter? All of a sudden, we're down 220 points.
Well, in a sharp reversal in the second half. Yeah. In fact, the Nifty is down more than 1% now, only in the last 1 hour of trade. And I guess some bit of worry is because of the global geopolitical tension. That is one reason being attributed to. Also, I understand there is a bit of chatter of some peanut selling as well because of that, SEBI regulation. So maybe you'll see a large, number. Not the net number, but the gross number could be large from the FIs, is what I understand from today's trade. But again, financials continue to track. It's not showing up in the index, but there is a lot of selling in the private bank stock. But again, it's very diverse move in the financial stocks. The PSU banks are well bid again by the larger institutions, and there is selling in the private bank stock from the larger FIs. So that's the overall flow perspective. For a change today, the broader markets has done relatively better, and they're outperforming. A lot of stocks are doing good in trade today and are buzzing as well. But net, I guess after a big move yesterday, a bit of reversal today. But again, in yesterday's up move, there was no large FI participation on the buy side. Yes. Same as in today's trade, there is no large FI selling on the downside. That's the overall feedback that I'm picking up.
So we'll wait for the institutional flow numbers at the end of today, and let's see what the FIs did, whether they added some shorts or they're happy with this net short position of 100,000 contracts. What about individual stocks, Nimesh?
Well, in terms of individual stocks, the first stock on my list today is Man Industries. That's been buzzing in trade on good volumes as well. Last when I checked, it was up 12%. I understand the company is likely to raise funds from some influential HNI investors via preferential issue very soon. So that's the reason why that stock is buzzing in trade. The second stock is Angel One. After a recent sell-off, a bit of recovery in today's trade, the stock is up 4%. Again, good volumes there as well. I understand the selling pressure from a leading FI fund seems to be largely getting over. And for the last few days, some domestic mutual funds are active buyers as well. So that's the reason why Angel One is in focus. The third stock is GAIL. Within the PSUs, after the numbers, again, strong buying interest is what I understand from FIs in GAIL as well. And also there was a Morgan Stanley tactical buy report in the morning on GAIL. So that's the reason why GAIL is part of my charter list. And the last one is Indiawul Housing. After a long time, some bit of traction seems to be back on that stock as well. Good 7% up in today's trade on good volumes. I guess some bit of excitement is before the rights issue. The company is looking to raise money via rights. So the record date is day after, which is Feb 1st. So tomorrow technically is the last day to buy into Indiawul Housing if you want to play it through the rights issue. So that's the reason why Indiawul is in focus as well.
Nimesh, and for Indiabulls, I mean, it's been a story for a while, right? I mean, they tried to, I think, raise money through investors, etc. I guess, I'm not sure what happened, but we never heard back from them, right, in terms of what happened, whether they're able to attract investors. And this rights also is pretty, has been, I mean, the way they're doing it is in pretty attractive terms, right, for investors.
That's right, Prashant. So I guess that's the reason why the street is a bit excited as well. You rightly pointed out the company has struggled in the past to raise funds from the larger institutions via preferential or for some other route. Now, finally, they've decided to go through the rights issue. So they're going to raise close to 3,700 crores via rights issue. As I said, the record date is Feb 1st. So technically, till tomorrow, one can buy for eligibility for the rights. Now, the ratio is 1 share for 2 shares. So you'll get, for 2 shares, you'll get 1 right share at a price of 150 rupees. But interestingly, there is a call option as well. So in the first installment, you only have to pay 50 rupees, and the remaining 100 rupees has to be paid over the 12 months whenever they call for money. So I guess that's the reason why there is a bit of excitement. And also, I spoke to a couple of large investors. My sense is even outside the existing shareholders, there is some large commitment coming in for the rights issue, and that's the reason why there is a bit of excitement. So there is a technical reason the stock is up today, largely because of the record date. I guess tomorrow is the last day, so a bit of chase happening for one to participate in the rights issue in Indiawul Housing.
Thank you very much for that interesting list as always. Rahul Sharma is back with us for a few BTST calls. Rahul, the picture pretty much changed from the last time we spoke about, 45 minutes back. The selling pressure has accelerated, 200 points plus gone on the Nifty right now. What would your call be? What have you made of this last hour selling? And then the BTST or STBT calls?
Yeah, so clearly Nifty has retraced 61% retracement of the bounce back that we've seen in the yesterday's session. And that doesn't bode well for the bulls. I think the next support for the Nifty is placed at 21,450. So another 75 points can be taken off in tomorrow's opening session. So either you could look at buying the 21,500 puts for BTST or look at shorting Nifty futures at this point in time. I think the better risk reward to be had is in Bank Nifty. That index has relatively fallen lesser, and around 45,950 is where the resistance is for the banking index. One can look to short with a stop loss of 45,950 and a possible down move up to 44,700 on the downside from a 2-3 day kind of a perspective. So I think banking index is the one to go for. Clearly a weak closing for Nifty, and we feel that tomorrow's opening should also be on the softer side.
Okay, that's the Nifty, Bank Nifty. Rahul, any other stocks, any other trades you want to leave us with?
Yeah, so one thing that looks bearish is Ultratech Cement. The stock has formed a bearish engulfing candle on the daily charts, completely reversed yesterday's bounce back. This can be looked upon for shorting for a target of 9,800 on the upside. Stop loss placed at 10,100 as per the spot levels, and we feel that there's a good, bearish down move that can be played in this stock.
Okay, thank you very much for that. Blue Star numbers are flashing for you on your screen. The bottom line looks to be better than what the street was anticipating, higher than the consensus expectations. A good 100 crore on the bottom line. The top line too is above our expectations by about 115 crores. So 2,241 EBITDA looks pretty okay. The stock is up nearly 3%. It spiked up post the beat that's come through on Blue Star. Let's get in some earnings expectation. Maruti will be reporting the Q3 numbers tomorrow. Sonia joins in with the key expectations. Sonia.
Well, thanks a lot for that. It's a decent set of numbers expected from Maruti tomorrow. On the top line, we're looking at a 16% growth at 33,740 odd crores. Now, on the EBITDA front, a growth of 40% is what we're looking at year on year, coming in at 3,980 crores. And the margins are expected to move up to 11.8%. The profits could grow by about 30 odd percent. But if you look at the overall volume growth, it's been sub 10%, so single-digit volume growth of 8%. That's because despite the utility vehicle segment doing very well with a growth of over 40%, the problem really is in the mass market segment, in the small car segment. The entry-level models continue to be under pressure, and that segment has declined 48% year on year, putting pressure on the overall volume growth. Even if you look at the EBITDA margins quarter on quarter, there will be a bit of a dip. That is because raw material costs have moved up in the quarter gone by, and there's operating deleverage as well. Hence, EBITDA margins will be under pressure quarter on quarter, and the small car segment continues to be under pressure. That perhaps describes the, or rather justifies the, lack of performance in the stock. If you look at it, the stock has not done anything in the last 3-4 months. In fact, it's underperformed the auto sector this year as well. So let's see, awaiting more commentary from the management. If things pick up in the rural markets, that's something that the street will look forward to. Back to you.
Okay, all right. Thank you very much, Sonia, for that. So that's Maruti in focus tomorrow. Markets down a whole 200 points. Prashant, remember you were saying 400 and 100. So we were down 25%, but now the give back is 50%. So I guess it's volatility and maybe some nerves ahead of two big events, budget and Fed.
And rightfully so, right? As I was saying, I mean, another 100 on top of yesterday's would have been kind of hard to.
Ferocious.
I was struggling to explain yesterday's 400, but it's in that sense, I mean, it's not. I mean, it's a large cut, but the point is that you've got to look at where we're coming from, which is yesterday's big surge. We'll take a quick break here. We'll be joined by Jay Bala of Cash the Chaos on the other side. Stay tuned. Okay, well, welcome back. Jay Bala is with us of cashthechaos.com. Jay, good to have you with us here. If we had you yesterday, it was a 400-point up day. But we have you today and it's 200 down. So that's more in line with what your view has been of the market for some time. I'm sure you're also a little perplexed by all of the volatility.
Yeah, hi, Prashant. Good to be here. If you recall from my conversation, I had said that index managers would try to prop up Reliance to cushion the fall of the markets. And I said, if you see my prepared notes of last week on the 16th of January, I had said that Reliance has got an incomplete upward, structure. So that's the reason why we saw, a 6-7% up move there, and it's starting to cave in now. So it is not that much of a surprise, yes, but it could have been a little softer. Right now, Reliance is the keys to the whole market, and as long as Reliance can stay about 26.40, I think that can give a little bit of hope for the bulls. But the banking index is the weakest. I've been saying that for quite some time, and it's behaving exactly as anticipated. And any up move in other pivotals is just to cushion the weakness in the banking sector.
Jay, hi, good afternoon. So, since, Reliance will have to do the heavy lifting, on the Nifty, what are the levels that you should look out for? I mean, yesterday we had this big surge all the way above 21,700 thereabouts. Do you see a retest of the earlier highs anytime soon?
I was more convinced that a top was in, but here's the fun fact there. So the 22,124 high also happens to be the date, India has been so euphoric about temple construction and tourism launch. Here's an interesting fact. If you draw a Fibonacci retracement of 15,183, the low of 2022 to the present high, the 78.6 Fibonacci retracement comes to about 16,424. And that's exactly the date the elections have been announced on the 23rd, the day next to the temple construction or the temple consecration. So it's a very interesting statistics. Let's see what the market does and what behaves. And when it comes to the extreme short-term support, 2970, that's absolutely critical. Below that, the market is taking a big tumble.
What about Reliance Industries? What did you make of yesterday's rise and today the little bit of profit taking which is set in? What are the charts telling you?
As long as the index can stay below 21,940, I believe the lower lows are the more likely scenario. And the banking index, the critical support is about 43,600. So I think the banking index has a much bigger chance of breaking these critical supports. I think the trend is strongly down for the banking index. Little bit, here and there for the overall Nifty. But if Reliance were to break, like I've said earlier, I think that will also take the downward path.
Sorry, on the Nifty, what was the level for the make or break for you, Ajay?
2970 for the Nifty, but I think it's just a matter of time for the banking index. The banking index is firmly down.
Okay. Okay. And with this, all of this plays out in what time frame, Jay, in your opinion?
I think the next 3 to 6 months is going to be very critical. We're going to see, even if we take the market as bullish over the medium to long term, and this Fibonacci retracement I'm talking about, although it's just fun and interesting, there is a distinct possibility the market could drop to 16,400 in the medium term. But for that, it's absolutely critical. Nifty has to break 2970. That will convince me there is no more higher highs coming through in the immediate term. Even now as we speak, the market is behaving in a bearish fashion as it should be. But my time frame for this is about 3 to 6 months time frame.
Okay, all right. I think that's the sort of countdown to the close. Jay, great to have you with us here. Thank you very much for your time. Appreciate it as always here on CNBC-TV18. We're down 200. We'll end down 200 points. So taking a big bite out of yesterday's gains is what we've done. And I think the Nifty Bank will end about 0.25% lower. So at least today it did a little better, but falling less as compared to what the Nifty did. And small cap index, far off the day's high. We were up 1% of the small cap index at about 220 as we were walking in. We end with about 0.25% gain. So that's a far cry from where that index was. Mid cap index is firmly in the red with a full near 0.5% cut in trade today. Yes.
The bell is gone and the Nifty has managed to, at least on the last tick, defend 21,500, though it's a very steep 200-point fall on the Nifty. And the sensex is ending below 71,200 after taking a cut of 750 points. Mid-caps too nursing a loss of 0.5%. But today the banks fared relatively better, at least the losses. The Nifty Bank was down just about 0.2%. The bigger losses were seen in the CPSE index as it saw a cut of close to about 1.5%, while the energy index too was down 1.5%.
Well, overall, if you're looking at the mid-cap screen, we're down about 0.4% over here, absolutely even Steven on the advanced decline ratio, with some of the PSU stocks actually cooling off a little bit. So you've got some of the railway names, for instance, Ircon, IRFC, these are down 2.5%. But on the flip side, you do have some names like BHEL, UCO, these managed PNB, some of the PSU banks, for instance, they managed to find some traction. In terms of key result reactions, RR Cable is down about 3%. And Z is a stock in focus as well, as a lot of the litigation gets underway, arbitration proceedings, and then, of course, the move with the NCLT here, 6% up on Z as the day closes out. Well, with that, we're out of time on this edition of Closing Bell. Thank you very much for being with us, but don't go anywhere because all the action continues. Up next is Markets Forward.